What's up, everybody? It's Jonathan, and today I want to make a video on how to buy a call option. And this is just going to be a basic call option tutorial. Now, I was a market maker for 5 years on the floor of the Chicago Board Options Exchange. I've taught hundreds how to trade options. I speak options fluently. So watch the video, see if it'll help, and do me a favor. I make a lot of these videos, so in the comments, if you can just leave, yeah, it helped a lot, or way too basic. Once I get that feedback, I can start building on this new series of tutorials that I'm going to make. So let's go to the chart. I'm going to present on Thinkorswim, and I'm going to walk you through how to buy a call option. So in front of you, I chose a random stock, RIG, Transocean. We're going to look at September, 25 days until expiration. Last trade, $11.86. Now, I simplified the options tree because I didn't want it to be confusing. So all we have is the bid and the ask. So the market makers are willing to buy the 12 strike for 40 cents and they're willing to sell it for 41 cents. So if you wanted to buy it at the market 10 times, it's going to cost $410. Or you can sell it for 40 cents. Now here, I put the intrinsic and I put the extrinsic. Here's how I want you to think of this. Intrinsic, it's stock. It's real. Extrinsic is fluff. It's premium. For example, if you look at the 9 strike here with 25 days to go until expiration, 9 plus $2.86 equals $11.86. It's stock. Intrinsic plus the strike is the stock. Over here, the extrinsic is how much premium is in those options, and there's no premium in the 9 strike options, or a penny of premium, very, very little. Let's talk about buying a call option. Now, my advice, how I teach, what I strongly suggest for you as well, is you should trade out of the money options. Because if you want to trade in the money options, you might as well just trade stock. We're going to look at the out of money options. Specifically, let's look at this 13 strike. It's 11-cent bid at 12 cents. Now, the great thing about out of the money options is it's a relatively inexpensive way to buy stock. You could buy 10 of these. It's $120. You can never lose more. If the market or rig gets above $13 in 25 days, you're going to be long 1,000 shares of rig. You were able to get long 1,000 shares of rig for a $120 investment. That's pretty cool. If the market or if rig doesn't trade above 13 by expiration or $12.99, you have an option. You can choose whether to be long 1,000 shares from 13 or not to be long 1,000 shares from 13. If the stock's at 12 or 12.50 or 12.80 at expiration, you don't have to do anything. The exchange is going to use common sense and understand that if the stock's at 12.80, you do not want to be long 1,000 shares at 13. But you could also choose to exercise if you'd like. You're more than welcome to be long 1,000 shares from 13 when the stock's trading at 12.50. You would just have to tell your broker to exercise that position. But you don't have to. So that's why you have an option. You have a leveraged option to get long 1,000 shares at 13. And I would only do that if the stock's above 13 at expiration. That's all the call option is. Now the seller is just taking the opposite bet. The seller, if he sells 10 of these, it's $110 credit. If the stock's under $12.99 within 25 days at expiration, that seller gets to keep that $110. So the seller is going to make money more often than the buyer in this specific example, because right now the seller is winning. The seller is winning because it's $1.14 out of the money. If everything went to sleep, if the market went to sleep or closed for 25 days, the person who sold the 10 lot is going to make money the person who bought the 10 lot is going to lose money. But if that stock runs up to 15 by expiration, the buyer of the option makes $2 10 times, or $2,000 minus the 120 or the 110 that he paid. There's great leverage. It's speculative, but that's why people use call options. So this is the start of a brand new options tutorial, a new playlist, a new series. In the comments below, let me know if these are perfect, too basic, you want me to slow down, whatever you need. I want to get some feedback so you get the most benefit out of this new series. Additionally, do me a favor, like the video, subscribe, share. It all helps, and I really appreciate it. Jonathan Rose, active day trader. I look forward to seeing your comments. I'm happy to reply to each one of them. Thanks, guys.